Hello, traders. Gary Wagner here. Approximately 1 o'clock in Honolulu, 7 o'clock in New York. It is Tuesday, 10th day of August, 2021, and this is the daily report for gold and silver. Fractional gains for the first time in 4 days, with the market closing up, meaning gold, about $3.30. However, it is still hovering near the close that was achieved Sunday in Australia as well as Asia. So I'm not convinced that the worst is over yet, but the market is attempting to consolidate. Only time will tell. We'll look at different resistance and support levels. We'll explore an updated Elliott wave count with this major move down, and that will all occur on today's report, which begins now. Today, for the first time in the last 4 trading days, we actually saw gold gain fractionally, up currently $3.30 at $1729.80. Considering that gold did open at $1,730, we actually saw a slight decline, about 20 cents from the open to the closing price. And it is for that reason that we have a very doji-like candle, meaning a very small-bodied candle, with the open and close really 1 tick or 2 ticks apart. The other thing that I find noteworthy is the fact as to where that fell. And once again, it is falling at the 78% fib retracement level that comes in at right around 1730. And after the decline that was witnessed overseas on Sunday and a $68 recovery, the fact of the matter is it does seem as though, at least on a tentative basis, that gold is trying to find some support at approximately this price point, $1,730. It is still a little too early to ascertain whether or not we will see a further decline in pricing or if we'll find support and move back higher. We can say that the dramatic sell-off has certainly baked in any talk about tapering, at least partially, if not completely, so that when the Federal Reserve speaks and convenes at the Jackson Hole Symposium, which is at the end of August, it would be hard to fathom an announcement for tapering even at the end of this year, beginning of next year, really adding that much more downside pressure to gold. What would add pressure to gold is a raise in interest rates, and there is no expectation that we will see that this year and even next year for that matter. One of the ways that we can gauge the strength of a particular trend, uptrend or downtrend, is by using Heikin-Ashi candles. The reason is they're a variation off of a moving average because they fix the open as the midpoint of the prior candle. What we look for when we're looking at a downtrend and a way to gauge the strength of that downtrend is, first, is there an absence of upper wicks? And in the last 3 trading days, there has been no upper wicks. And what that means is that at no time during the trading session did pricing go above the midpoint of the prior day, and that's what makes that such a bearish signal. The second thing is body size. And while the body size has diminished a little bit, we can clearly see that it is relatively still pretty strong. When we look at this candle, this is today's candle, in reference to some smaller candles such as in here or in here at the beginning of a trend, we can definitely say that there is still some room to the downside based upon the way the Heikin-Ashi candles look. However, there's a caveat to that, and that is the low that was achieved, because when we go back to this double bottom that occurred at the beginning and end of March, we can see that we came in very, very close to that in terms of our intraday low. The other thing is that current pricing has been hovering right around the 78% Fibonacci retracement level. And what that means is that when we look at the data set, which begins at 1674 up to this top at 1920, it tells us that there could be definitive support right in this area. The other thing that's noteworthy is we looked at the possibility of a breakout with this compression triangle, and this is a textbook case of a false breakout. In other words, we definitely had a break to the upside that was very short-lived because a fundamental event completely changed market sentiment in the blink of an eye. Traders, we are approximately 1 minute away before Australia begins to trade. It is 1 minute to 6 o'clock Eastern Standard Time in New York. We want to see if, first of all, if it can maintain a price point above, I believe, a key and critical area of price support, which is 1728 right here. And if so, what we would look for in terms of the marketplace itself is where, in fact, it wanted to trade to. Now, it did just open, and we are trading at 1730 and 20 cents, 1730 and 10 cents. It's difficult to see, but it is this one line right here. So as you can see, it in essence has opened right at the point in which gold closed in New York today. And so the key is going to be whether or not we see support come into this area. Because if we cannot, it could retest these lows that came in March and just the other day. Although I think that the market, in terms of the sell-off, is overdone. It was an exaggerated, knee-jerk reaction to an extremely strong jobs report that came in well over estimates and close to 1 million new jobs added in July. Lastly, I do want to take a look at our current Elliott wave count. This is a major count using weekly charts. And what is interesting is that we are still looking at this defined top here at 2088 as a conclusion of a major third wave. We are still looking at the correction that followed. In other words, the market moving from 2088 down to 1674. This, in essence, double bottom as a conclusion of a fourth wave, which would put us in a fifth wave. Now, here's what's interesting. We can say that we have had our first wave up, and the fact of the matter is we would still be in a wave one if pricing took us below the low achieved at the conclusion of the fourth wave. If it goes below that, it's still considered a single wave count. This is a dramatically excessive retracement. It's well more than 78%. It is almost a 1-to-1, but it doesn't negate the fact that it still could be a wave two, and we could go into a wave three. Of course, all bets are off if we break anywhere on a closing basis below 1674. That would negate this being a wave one and concluding, and then a wave two. We would still be in a wave one in terms of our major count. We'll have to see how this unfolds, but for right now, our recommendation is to maintain a neutral stance and let the dust settle for a little bit longer to see if these levels will hold. And traders, silver had a fairly strong day, gaining about 6 cents, 23.32.5. It's about a 0.25% rise on the day. We can still see in terms of the Heikin-Ashi that it shows a defined downtrend, and we can also see that kind of pivotal or doji candle which formed in trading today, very similar to what we saw in gold. This is me, Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.